Welcome back to the program, everyone. I'm your host, as always, LitecoinLeader, otherwise known as Jeff. All my information is, can't even get this right. Here we go. It's right there. I get it on the screen. There's stuff scrolling across the bottom, too, if you want to know about a few more things. But I wanted to touch on a topic that I mentioned in the two videos that are being launched today about what's going on with Bitcoin rising. And I mentioned there briefly about the Brazilian bank that's adopting Bitcoin, and it's going to be doing things with Bitcoin. It's this story that came out a few days ago. I wanted the dust to settle on the story, and I found a good version of it. I'm going to read a lot of it to you and give you some details and some warnings that are actually about this process and what could be coming to the States. So stay tuned for that. As always, please like, share, subscribe, do all that cool stuff. Watch us over at EconomicPreppers.com. Stay tuned to both those channels because we have lots coming. But let me dig into the story a little bit. Now, I've been talking about Brazil and Russia, Brazil, Russia, the BRICS nations for a long time. I'm going to dig into this story about Unibanco, which I think I pronounced that right. It's testing my accent there. Took 6 years of Spanish. Now it's more Spanglish. But we're going to dig into this story in a moment. But let me highlight two other stories real briefly just to show you that this isn't new to Brazil. So here's a story. This is, again, thank you for the paywall, Bloomberg. But back in January of 2022, Brazil and Rio de Janeiro wanted to become Brazil's cryptocurrency capital. They're spending 1% of their reserves on crypto. Another story about it. Rio de Janeiro mayor plans to invest 1% of the city's treasury in crypto. So Rio has been a big player. I did a video a while back about Watch Rio. I think I actually sang in that one. I'll put a link to it up in the corner. I'll try to remember that. But let me dig into this story, and I'm going to read a little bit about it. And so I highlighted this, and I highlighted a lot of the article. Let me read a lot of it to you because I know some of you are just listening in the car or whatnot. But Brazil's largest bank, Itaú Unibanco, launches Bitcoin trading. Let me know in the comments if I got that even close to being pronounced correctly. I don't know Portuguese. I took Spanish. We'll see how I do. Brazilian bank Itaú Unibanco has reportedly launched a cryptocurrency trading service for its clients as part of its investment platforms. I'm trying to zoom in so that more people can see this. Let's see. Brazilian bank, I'll say Unibanco for now, has launched a cryptocurrency trading service for its clients as part of its investment platform. And again, I highlighted this in different colors because as the closer it gets to red, the more of a warning. So the largest Itaú, the largest bank by assets in Brazil and one of the leading lenders in Latin America, is debuting crypto trading with Bitcoin and Ether. In the future, the bank plans to add even more cryptocurrencies for trading, this guy noted. So sounds good, right? Banks are allowing people to get crypto. Sounds great. Well, let me start with some of the warnings here where the story I highlight starts to turn a little bit more red. Itaú Bank will serve as the cryptocurrency custodian for the crypto trading service, meaning that it will store crypto assets for its clients. If you don't know why that's bad, I'll get to it in a moment. Antunes Antunes is the digital asset head for the bank. He noted that initially Itaú's clients will not be able to deposit and withdraw cryptocurrency using external crypto wallets. Probably should put that in red as well. He stated that the most important thing is that when you keep your money in the bank account, you will have the guarantee of Itaú's balance sheet as security for the amounts invested. Basically, he's telling you, trust the bank, don't worry. Okay. The news comes as Brazil's biggest lenders, including Itaú Unibanco, BTG Pactual, and Santander Brazil. Santander is pretty big. I've heard of that one. Are reportedly ramping up headcount and adding resources in preparation for the nationwide rollout of the digital Brazilian real called the Drex. Sounds ominous. Drex sounds like, a bad sounds like a bad group of people in a science fiction movie, fearing the Drex. Anyway, Itaú reportedly launched digital asset custody. Let me say that again. It's early. Itaú reportedly launched digital asset custody earlier this year, with Antunes disclosing that 85% of its clients were interested in keeping their crypto with the bank. That sounds like a slanted poll. It sounds like that's the way that they're positioning the results of a poll. And probably the question was posed more like, would you like us to offer you crypto? And they said, sure. It's been about a month since two local players announced that they were leaving the crypto market. According to Reuters, brokerage and investment company XP Investimentos recently announced a shutdown of its crypto services without citing its reasons. The financial services firm PicPay, owned by a conglomerate J&F, which also controls meat packer JBS. Why is a meat packer involved in financial services? That's interesting. Fill in your own jokes there. They reportedly cited regulatory uncertainties for terminating the crypto business. So I'll put a link in the description to this article. Let me drop out of here now and just talk about this once I find the right window. So what is my take on all this, and why am I highlighting some of this in red? Well, first off, I mentioned that you're not going to be able to pull. You can buy Bitcoin and Ether, but you can't remove it from the bank. And then the bankers are saying, trust us, you'll keep it safe, and it's insured by our balance sheet. Well, if you learn nothing from some, like just last year with 3 banks, Signature Bank and a few others going under and saying, don't worry about our balance sheet, you're protected, you're fine. What are you serious right now? I mean, if you don't know better by now in the crypto space, not your keys, not your coins, self-custody, if it's in someone else's account, if it's on someone else's ledger or asset book, it's not your asset. You have to do self-custody. You have to have a wallet. You have to have, pick a wallet, any wallet. You can have an EconomicPreppers, Ballet Wallet. You can have whatever you want, but you have to own your keys. You have to own your crypto. Otherwise, it's not yours. If you have to log onto a website, including your banks, to see what your balance is, it's not your balance. Okay. In the fine print, when you deposit in a bank, at least in the United States, I'm sure it's even worse overseas, but if you deposit funds into a bank, you're loaning them the money and you may not get it back. You are an uninsured creditor. Okay, this is the bail-in, which I've done videos on those before. I'll try to find another one of those. It's probably a year and a half or so since I've done those. Maybe I have to do one again. But crypto assets, okay, it's worrisome that everybody's like, hey, this is what I fear is going to happen in the United States too. So don't just like turn this off and say, oh, it's only Brazil. The BRICS nations are doing the same thing. These banks, banks in bed with crypto isn't necessarily a good thing. What they're doing is they're offering exposure to their current client base to things that they say, look at Bitcoin going up. It's going up like mad. Buy some Bitcoin now and we'll hold it for you. And then when they say, oh, the bank had a financial problem, sorry, we're bailing those funds in and it's not your Bitcoin anymore. It's ours, meaning the banks. What are you going to do? You don't have the Bitcoin. You don't have the keys. They're not yours. You cannot trust a third party, right? Trusting a third party goes against everything that what Bitcoin stands for. And I know it's a risk of self-custody and you have to educate yourself. That's why EconomicPreppers and myself offer so much education, and we're going to be offering more. And I'm going to, Dylan and I are going to do an AMA for our Patrick, and Patrick's very busy this month with the XRP coin, but what we're going to be doing AMA for our Patreons, and it's ramping up now after the Silver Symposium of our crypto. I'm going to get the name right. Crypto Collectors Club. So it's for collectors of coins like the XRP coin, the Satpulse coin, also for crypto enthusiasts and people that are collecting their own Bitcoin, their own Ether, their own XRP, and so on. Litecoin as well, and a few others. But the point is that you need to know what you're doing. You need to understand that banks make it easy for a reason, because easiness leads to laziness, which leads to losing your funds. And I'm sorry to warn you like that, but it's true. It's happened before and it could happen again. So just because a bank says, hey, we're going to offer crypto as an investment opportunity, doesn't mean it's the right one for you, because they said you can't remove it. You can't, and they don't say when they're going to allow that. Now, I think Venmo offered the ability to buy Bitcoin. And eventually at first they didn't allow you to remove it. And now it's an offer. It's an option now. But if it's not your keys and it's not your coins, you're at the mercy of the third party to give you your Bitcoin or your Ether or your other crypto back at some point. So don't fall into the trap. Like apparently 85% of Brazilians that are customers of Unibanco might fall into this trap as well. So not every story is perfect, and it's not everything that they make it out to be. So remember the source here. Reuters, not necessarily the best source for your own financial well-being. So Lots said today. I wonder, what do you guys think? Do you think this is a good story or bad, or are these warnings worth mentioning and should be heeded? Leave a comment down below. Again, like, share, subscribe. Really, really appreciate it. And I will talk to you in the next video. Take care.